Hey everyone, Lee Training with StocksToTrade, Tim Bohen back with you. I do a ton of videos on the channel talking about technical indicators, talking about trade patterns, scanners, all kinds of tools that we have at StocksToTrade. But most of the time I'm focused on penny stocks, low price stocks, and day trading. And I've been working with Ben Sturgill for a lot of years now at StocksToTrade, and I just kind of realized that I never really bring him on the channel. I'm kind of a YouTube channel hog. And the cool thing is he's got a new project coming up, and he trades a lot of options, a lot of higher price stocks, and it's just a great strategy that I realize at this point I don't talk about that much on the channel. So Ben, nice to not meet you. Obviously I've known you for a while, but everyone out there meet you. Talk a little bit about, a little bit what you do and kind of how it's different than those penny stock trades that I'm always talking about on the channel.
Sure. Yeah, we have a lot of different strategies. The one about the project that you're talking about is identifying certain spots in the chart, right? When we're looking at penny stocks, as we talked about earlier today, you'll see these things run and break out
resistance,
and explode.
Technical breakouts,
right.
Yeah, yep.
And then the next day it can just die,
yep.
right? Which is why day traders day trade these.
Yep.
They look for those levels, and then they target their exits, and that's it. And they wash their hands.
Yep.
But when you zoom out and you target moves on a daily chart,
yep.
and even you target big names that everybody knows about, like Microsoft or Apple or Mag 7 or AI stocks, we find these moments in the stock's life where we start to see pressure on these stocks build, right? And then we start to be able to identify those same levels where as buying continues to, go in and selling and the pressure starts to build, we have found through our research and through the back testing, and then also through putting real money trades to work in these ideas that, we're becoming more and more accurate in our ability to identify the key levels, the levels that matter, that when those levels get broken, it will likely trigger a lot of the buying that we look for from Wall Street. Because as you know, the only thing that makes a stock go higher is more buying.
Yep, yep.
And who is going to push it higher than the people who have all the money, which is Wall Street. So when you can identify those levels, then again, there's a lot of opportunity there.
So I know the question a lot of you are probably asking yourself, you mentioned Microsoft, you mentioned Apple, you mentioned Tesla, and he's like, hey Tim, most of the time we're talking about, an MLGO, a stock that recently went from $2 to $20 in a couple of days. Like you see those moves, low price stocks, especially if you got a small account or you're new, you see the potential. So now you're thinking about an Apple or a Tesla or a Microsoft that moves a couple % a day, even though it's the same type of chart patterns and key levels that we look at. How do you make real money trading those types of stocks when they're $400 like Tesla and they move 2 or 3% a day?
Yeah, well, that's great. The reason is it's just opportunity,
yep.
right? There's opportunity in penny stocks, and the opportunity exists because they are inexpensive stocks. Your average person can trade them. But as you mentioned, when Microsoft is above 400, right? You buy one share for $400 and it moves $3 and you think, okay, thanks. I have $400 at risk to make $3. But again, Tim, that's where options come into play, because a small percentage move in the stock could result in a massive move in the options, and that's why we have to target those very specific levels. In so many ways, it's using options to target similar returns that you guys see in the penny stock world.
Yeah. So give a kind of a brief, explanation of, like an option, why it's, how you can actually trade a Microsoft without having to have, $100,000 to be able to buy 1,000 shares or something like.
Sure.
Explain a little bit like how options work, because again, most of the time I'm just talking about trading equities, buying a stock at $1, selling it at $1.20 type thing.
Yeah. Well, I have found that from teaching options to people, they can be very conceptual. So it's important to, connect it to something that people already know about.
Yep.
Right. So what I like to connect it to is thinking about real estate.
Yep.
Right. So I, have real estate investments, and
Me
if
too.
I see a home that I like, and the home is $500,000, if I like it, well, then I probably think it's because it's going to go up in value, or because I think it's a really good neighborhood. Now, in order to secure that, it's going to cost me $500,000 in cash.
Yep.
And that's typically how most people get involved in real estate, right? And that's how you can think about an options contract. Imagine instead of going to that homeowner and saying, hey, would you like to sell your house for $500,000? And they say yes. Well, at that point, I got to go get a loan, right? But the way the options work is if I went to that homeowner and I said, hey, will you give me the option to buy your house anytime in, let's say, the next 6 months? And if you give me that option to buy it for $500,000 at any time in the next 6 months, not right now, but sometime between now and the next 6 months, I will give you $5,000 to give me that option to do that, which means that I don't have to come up with the $500,000 right now. If the neighborhood is appreciating in value, if that house appreciates in value, let's say in the next 3 months, right, they put in a new school or some feature that makes that neighborhood extra desirable, and all of a sudden the appraisal on that house goes from $500,000 to $600,000. If I bought the house and it appreciated $100,000 in value, it cost me $500,000. But if I bought that option to buy the house from the homeowner anytime in the next 6 months, and it goes up $100,000 in value, that only cost me $5,000. So I'm controlling the same asset for 1/100th of the price by buying that option to buy it.
Right.
Now, this is just not something most people do.
Exactly.
But believe it or not, Tim, we do this. We do this with our car insurance. Right? So if you're believing it's going to go higher, it's called a call option. If you're believing it's going to go lower, it's a put option. So same thing with car insurance. You all already buy put options by buying car insurance. If your car is worth $10,000, you enter into a contract that's only good for a certain period of time with your car insurance company. You pay a small amount of money compared to the value of your car. If you get in an accident and the car drops in value, right, you get paid that money. If it doesn't happen and the car stays, fine and doesn't get in a wreck and retains its value, well, then you've paid that company the money for the option to have them buy it back at the original price. And if it happens, you get paid. If it doesn't happen, then you move on and they keep the money.
So I think and to me it all makes sense, and hopefully everyone kind of gets that, the idea. You're basically, getting the option to join in that appreciation, or if you try to put the depreciation. So explain real quick, I think initially, again, people think thousands, tens of thousands, 20s of thousands of dollars. How much are options on some like the Magnificent Seven stocks? How much could someone trade those stocks with?
That is the $1 million question, right? And that's the great part about this, is that if you were to buy one share, as we said before, of Microsoft, and that's going to maybe cost you $400, but you could buy a call option on Microsoft if you see this level that you believe above there it's going to break out and go higher for as little as $50, right? And it helps you control.
And that's very common in options, a couple $100,
$50, couple $100. But here's what's amazing: that one contract controls 100 shares of Microsoft. So think about that for a second. That is 100 shares. That is $40,000 of value in Microsoft that you can control for $50 in one contract.
And that goes back to your kind of house analogy. You don't have to come up with 500,000. In your analogy, it's 5,000, which is a manageable price, and much like a couple $100 option, you're controlling a much bigger position. So when they move, your upside is so much higher.
Well, that's true. But the great thing about it, Tim, is that it's not just the upside that's higher. The downside is almost nothing. Again, think about that. What if I bought the house for $500,000?
And it burns down.
Right? And it goes down in value. Right? I'm out $100,000. But if I bought that option to buy the house from the homeowner, and it goes down in the next 6 months, I'm not out $500,000.
Right.
I'm only out $5,000. So the downside is much smaller. Same thing with Microsoft. If I bought $40,000 worth of shares and it drops, that hurts. But if I buy a $50 contract and it doesn't work, so what?
So last question, we'll wrap it up, is the one thing that I kind of frustrates me with when you start Googling options and stuff like that. You see all these crazy strategies like iron condors and black skulls and all this stuff. But what you do, and that's why that's why I wanted to bring Ben on. I mean, it's kind of again, what we do with these low price stocks. I mean, you're just buying a put or buying a call. It's not like you have some crazy strategy and all these math that goes into it. You're looking at the levels on the chart technical analysis that I use all the time is just simply buying puts or calls.
Yeah, I mean, again, I like to use the basketball analogy, right? There are a lot of crazy basketball moves out there with a between the legs spin, step back three. We're just making layups, right? This is a straightforward call, a straightforward put. You trade it just like you would trade, a stock, buy low,
I remember
sell
back
high.
when I got started, like I was interested in options. I'd buy these books, and I still have some of them. I mean, you buy like the average options book, it's like 1,500 pages. I'm like, what is this? And then all of a sudden, I kind of get a little more well-versed and come along, and then I see the people that are doing the best are, again, just buying puts and calls. And I'm like, why was I made it about 50 pages into the book and gave up, but because I'm just like, but then I realized that it, like many things, it doesn't need to be that complex. Yeah.
It doesn't have to be complicated, right? It's as complicated as you make it. And that's what we, call the lower level option trades. And that's all that we're doing here. But you know what, Tim? You said you're a real estate investor like I am. You're also a great trader that, trades just the shares. What's great about this strategy is that, hey, if this can break this level, and go up a couple percent, well, then obviously the options can do really well. But what's great about this certain moment in the stock's life is that if it breaks that level and we see this buying, that when Wall Street has a buy program, sometimes that can send this thing, more than...
That's why you always see the volume spikes at these levels.
That's right, more than 5%, more than 10%. You should consider doing this with me, man.
I might. If anybody I trust to teach me, it's you. So that being said, one of the two reasons I brought Ben on is I want you guys to get to know him. I don't want you guys missing out on some of these amazing trades, but we've also got a webinar coming up, soon, and the link will be to that below, and we get way more in depth. Obviously in a short YouTube video, we can only go over kind of the basics of the strategy. I think you did a great job of laying it out, but when it comes to really getting into the fundamental parts of that, we've got an hour-long webinar. It's coming up, and when you hit that link below, you get a free registration. We go way more in depth, break it all down, and actually got a free trade idea on that webinar. So when you go to that link, we will have a date there, but I do want to mention we will have replays as well. So if you're watching this video later in the spring, in the summer, etc., still check it out if you're curious, because I think because of that conceived complexity that I fell for back in the beginning, a lot of people just pass up these strategies because they're like, it's too complex. I'm just going to stick to buying and selling stocks. So check out that webinar, guys, and I'll look forward to seeing you there.